welcome to our Humania presentation today. I'm Wendy Carrazori from IDC Worldsource, and I will introduce Ariana today. So Ariana Kane is currently a regional sales director for Humania Assurance and has been licensed in both securities and insurance since 2004. She's a mom of three. She's a former university athlete, a psychology major, and yogi. I love that. And happiest when she's outside. She's passionate about people and selling, which is a means to serve and solve. So best we get good at it. She's also a certified sales trainer in business development, high performance coaching, and the psychology of sales. I think you're in for a real treat today, actually. I love it. I'm going to have Ariana take it away and do the presentation. And we're going to stop about halfway through for Q&A to answer your questions, et cetera. And we'll take it from there. So Ariana, if you could unmute yourself, that would be great. And I'm going to head back and I'll be back soon.
Okay, well, hey, thank you for that. You know, it's so great. If you ever have to do a presentation, the key is to get someone to introduce you, because it always makes you feel fancier, than you actually feel. The best part of what she said is that about getting good at it. So I want to start off by just saying, if someone hasn't told you lately that what you do matters, let me be the first to tell you that what you do matters. And so getting good at it matters. I don't know actually many professions that are more noble than what you guys do in helping people. And so just so we can feel a bit connected, I also was an advisor for over 10 years, almost 12 years. So sitting at kitchen tables like you guys, and it's not because I had any desire growing up to be an insurance agent. I was quite curious on how people get into this industry, but I got invited to kind of a How Money Works seminar. And I'd gone to university for 4 years and I had a great family and great parents, but nobody told me the stuff that I learned in 1 hour. And after that 1 hour, I've always been someone wired who kind of wants to change the world. And I remember after that 1 hour going, how is it possible? How is it possible that we are not taught this stuff? It really is important. And so when you are out there teaching people the rules to the money game, when it's an important one, and there are people kind of banking on the fact that they don't know the rules, I just kudos to you. And so I want you to know that about me, because I really am excited about helping you guys be better at your craft, because it only serves everyone. And so today we get to talk about one of the topics that I find most passionate in children's insurance. And I just want you guys to know that, as an advisor like you end up knowing quite a bit about a lot of companies, but you guys are independent brokers, you have choices. But when I got this position, I was like, well, dang it all, I'm going to need to know my stuff, because people are going to ask me specifics. And so I had to learn every detail about each one of these web-based platforms. And when I got to this children's product, this Children 360, I was in my apartment by myself reading up on this stuff in night times on weekends, because I don't sit in incompetence well. And so I was like, I need to know this stuff. But I was sitting in my apartment by myself out loud saying, you've got to be joking. How is it that people don't know about this product and what it is and what it offers? And I thought it's got to be only because people don't know that it is there and what it entails. So I'm excited to share it today with you, so that you just know what you have. Another tool in your toolbox. I'm going to share my screen, launching into my gold. All right, so we're going to be talking about children's insurance today, and the kind of different options we have. We would hope that most children are insurable and have no health issues. And so we're first going to talk about that and that product, but giving you some options. So before we get going, I just did this presentation live. And so I had added a few of my favorite slides. I can't help but kind of add life principles to what you guys do. It's just not about product. It's about why it matters and the benefits. But I truly believe that the only business there is the business of making someone's life better. I don't care what product it is in the world, what people sell. This should be an eternal principle. And I also know that that's true of me today, to try to make your life better and feel bettered by, like that. Speaking of which, Wendy already talked about a CE credit. You will be getting that. With us, we send you a quiz afterwards, everyone that's here today, and you need to get a 60% on that, but don't stress out. You can write it again. It's not pressure. And if I do my job well, you should pass with flying colors. But just I always love to remind that CE actually stands for continuing education. And education isn't about knowing more. In this information era, you don't need to know more. It's not about knowing more, it's about being better. And so my hope is that you always feel bettered. Well, at least today with me, I hope you feel bettered having spent some time here, because I know that time is our greatest asset, and I don't take it for granted. And I want to make sure that that time feels like it was well spent for you. So there are really only two ways to grow in business. Again, doesn't matter what business it is. There's only two ways to grow in business, and you either get more customers or clients in your case, or you get more from the customers that you've got. And I truly believe that this product can do both. So let's try and help you do both. It's a conversation starter. It's ways to get in kitchen tables. It's ways to really add value to a lot of different groups. And I'm going to give you some ideas. But I had a great mentor once say to me, the best presentations are when you tell them what you're going to tell them, and then you tell them, and then you tell them what you told them. And so it's just kind of the mother of learning is repetition. But today we're going to talk about how to start the conversation. We're going to talk about our key product for today, this Children 360, the target market, and a lot about the product and its highlights. And some of the harder cases where they might not qualify for the Children 360 product. We'll talk about Pro Health, our cancer insurance and critical illness there. And then our dependent life child rider, and just a conclusion. So there you go. So sales, people are like, I don't want to sell. I don't think anyone says that. They grow up and go, I can't wait to sell. But selling really is an honor, because it's just a way to serve people and solve problems and simplify pain. And this is really a product that I believe can do both in a way that people feel like they're better parents and they feel good about themselves. But if you can become a solution to a problem, it's not about selling at that point. Like if you can become a solution to a problem that people have, you become a valued resource instead of a sales pitch to them. And even better, we used to say, go solve problems, go solve problems. Even better, if you can find a problem, right, which they might not even know they have, they kind of already deem you as an expert in that field. And you're able to be a trusted resource, which matters when there's a ripple effect, as you guys know, when you can start a conversation with a family that may otherwise have not shared some financial information with you, but they want to talk about this. Once they see you as a trusted resource, you know how this happens. I could probably unmute you all and you'd give examples of someone that you just started this conversation with this, but then it opened up a whole other things because once they feel like they can trust you on something, especially when it comes to their family and their children and their finances, I say a simple hello can lead to a million things. So there is a difference between just giving more information. This goes for you guys at kitchen tables, as well as for me as a wholesaler or a sales director, just trying to give you guys more information. This is where we kind of get lost a bit. We get lost in teaching. And really it's about growing desire, asking questions about the family, asking what if this were to happen, what would the plan be, and get them to grow their desire for what you're talking about, not just over explaining and not enough emotional stimulation, because we all make decisions emotionally. We love to justify those emotional decisions logically. So the things need to make sense and we need to have the bullet points, but really growing desire, a salesperson's capacity to do that is where they really start to shine. So a hard but real conversation. It is not easy to talk about children's insurance. There's something about it that where parents kind of feel like it's like la 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 la, like there's some bad mojo or bad juju around this idea of children's critical illness. Like you don't want your child to get a critical illness, obviously. But it seems to be a harder conversation. But if you guys take nothing away today but this idea when it comes to children and children's insurance, it's kind of the quote there in yellow where it says, ensuring your child is not about profiting from their misfortune. It's about not sinking when they need you most. I'm going to say that again. Because even for you as advisors, if you have convinced yourself that this is a difficult conversation, first of all, you get paid the big bucks to have hard conversations. Your ability to have hard conversations is going to be inseparably connected to your success when it comes to insurance. Period, right? Insurance, especially children's insurance. But so let me, for your own belief level, because how hard is it to talk about things we believe in? But if you guys subconsciously don't believe in this or don't want to have the hard conversation, then you just don't. And nothing ever get sold unless someone talks about it. And so insuring your child is not about profiting from their misfortune. This is what you say to people, and you guys believe it. It's insuring your child is not about profiting from their misfortune. It's about not sinking and going under when they need you most. So that's my passionate plea. When I was at a sales conference years ago, I heard a guy basically talking about this concept, and it has changed me ever since. And I hope it does the same for you guys. But the truth is, people say, yeah, but it's a hard conversation. I'm like, you know what a harder one is? A harder conversation is when something goes wrong and you have to have the conversation about how you didn't have the conversation. Okay. So he was talking about how, you guys, everything's hard. Being married is hard. Being divorced is hard. Being fit is hard. Being overweight or sickly is hard. Being rich is hard. Being broke is hard. So choose your hard. As insurance advisors, you guys need to choose your hard when it comes to especially talking about juvenile insurance. Remember, financial planning is holistic work. Helping families plan for the best, but prepare for the worst is the very reason for the advisor's role. If children are a part of that plan, then they are part of the whole. So let's count them in, because they do. So children are a part of this holistic plan, period, if they're in the family. And so when we talk about planning for the worst, what do you guys think is a parent's worst? If you're a parent, you absolutely know this answer. And if you're not, you know this answer. What do you think is a parent's worst? Because I promise you, it's not bankruptcy. It's not even the financial things at all. What a parent's worst, if you ask them, has something to do with their child being ill, injured, death, whatever. It has something to do with their child. And so when we say plan for the worst, that is it. So important questions to ask is, how long could you live on one income? So if a child is sick and one person doesn't want to work, maybe they're living on one income anyway, but how long could you live on an income? Because there's not just about the income lost. If a child was to be sickly or sick, it's about the cost of that illness, depending on what it is. And then, so how would you pay for all the expenses related to your child being sick? These are not hard questions, but they ought to be just part of a system or your process of being a financial advisor and planner. If your system or process doesn't include these questions, then it is incomplete. And so you need to add those in. It's not about it being a big deal. It's just part of the process. How long could you live on one income should your child get sick, and how would you pay for all the expenses if they were? So usually when people don't have a plan for this, you guys know how this goes. Retirement, they're using their retirement savings, so pulling money out of RSPs when you're already making your income that year is not a good idea. Even when people say, what's the cost of this plan? I promise you the premiums on these plans are less expensive than the tax bracket you're in taking RSPs out of a year you're already making income, okay? Family savings for travel or projects. So anything they've saved, that usually is never enough, by the way, in this country, if anyone has any savings at all. But if they have anything saved for rainy day, it's usually never the amount that they would need to continually pay for expenses for a critical illness. Sorry, I mixed that up. So I've already talked about RSPs. It's the same idea of the retirement plan, I guess. And here's where it gets hard. When I said choose your hard, choose your hard. Do you want to go borrow money from family and friends? That's a harder conversation. And these GoFundMes that we see, I would rather have the conversation about them having a children's plan and a small premium for that than ever having to start a GoFundMe. Start a GoFundMe for that, something that could have been prevented or could have been handled financially. So children's insurance is key. So this is the product I was telling you about, I was getting excited about. Children 360 really is that. In fact, I was enthralled with the brain of whoever created this product, because they have thought about so many things. So this is called Children 360 for a reason. It's not Children 180, not Children 90. They have really thought of the whole gamut. When it comes to an all-encompassing, comprehensive children's product, which is easier to sell than just thinking about having a children's critical illness policy. So it's a simple process. It's a non-face-to-face product. It's a non-medical product. There's no, at any time, any medical exam for children. There's just online questions. There is no tele-interview, and there's no signatures required. It's an email confirmation once you hit submit online, of which they have to confirm the email, and then they get another email saying that the policy is immediately in force, of which then a physical paper copy would be sent to them within the following weeks. So super easy. And with this product, like I said, Children's 360, it can be compartmentalized in a separate product. It can be a critical illness policy only on its own. After I'm done with you today, I hope you'll never sell it just as a critical illness policy on its own, but it can be. And then there's the additional life insurance. It can be a critical illness or life, depending on the first event, or it can be and life. So they could be get the critical illness, have a payout, and additional life should they pass away. And then my favorite thing is this Options Plus. We'll go through what the Options Plus is $10, a flat $10 extra, and never in your life have you seen value for $10 like I'm going to show you in this Options Plus. And then the premium refund benefit, that's what they call it there. It's return of premium. There's nothing better than having a return of premium option, and the policy stays in force when that happens. It's in every 15 years. But it's kind of like a no-brainer as far as there being a risk involved, or but just really having it covered, because there's a saying that says preparation releases pressure. Preparation releases pressure. And when you get all of these things covered, talk about preparation, right? It's feeling like we did our best to cover our child. So there's two available coverages. There is critical illness coverage, or there's critical illness coverage or life insurance payable at the first event. And can I just say, how cute is this marketing on this product? And it's not just about being cute. I want you guys to know that in my last decade, I've spent a ridiculous amount of time in sales copy, marketing, online ad creations, all sorts of things for a nonprofit company that I was a part of. And I just need you to know that marketing matters. It really matters, because trying to sell a critical illness policy to a family, if it's just seemingly like a regular insurance policy like all the others, imagery is powerful. It really is. And when this is catered to and looks like and is made, it's why children's hospitals even are painted the way they are and presented the way they are, is because there's something warm and welcoming about it. And it's the same when it comes to this product. It helps you. It will help you in your sales, the marketing on this. So there's 37 covered illnesses. Typically, obviously, we know that most of them have the 25 or 26 covered illnesses, but it's because there are specific ones to do that are typically in childhood. They're childhood illnesses. So autism, cerebral palsy, and they're listed there, but it's a whole heck of a lot of critical illnesses covered. And if it seems like it's a lot, it's because ones that are specific to childhood alone. There is additional life insurance that you can add on this. So like I said, that way you can have critical illness or life, or you can have critical illness with the additional life, which means that if they got sick, they would have the payout of the face amount they've chosen, as well as should the child pass away because of that critical illness, there would also be a payout for that. But this one really is the Options Plus is honestly what puts the 360 in our 360. And the first part of the Options Plus is this. Number one, in the Options Plus, it includes a compassionate leave benefit. This is so that you can be by your child's side. If someone is working, if one of the parents is working and they choose to not work so they can be by the child's side when they're critically ill, this is what we have created in here. And the reason is, you guys, is that as you can imagine, parents want to be by their child's side. And so what was happening is they were either claiming on their works group benefits, they're claiming disability on anxiety or depression, or saying whatever they needed to be by their child's side. Now, it's very likely that they had some anxiety and were feeling sad and depressed, whatever, but the point is, what if they could just take the leave without having anxiety, depression, or some sort of illness that they're talking about forever on their medical information bureau? So we don't want people to have to go through, MIB or state an illness per se. We just want them to be able to take a leave. And if they do, this compassionate leave benefit is going to pay the parent that's taking the leave $1,500 a month for up to 12 months. So the $1,500 might not even come close to replacing their income, but it's something so that they can be by their child's side. And you guys, for $10 more every month, just that alone, $1,500 a month for 12 months is an $18,000 value. So price is never, ever the issue. It's perceived value is what people need to see, so that makes the price worth it. So we help cover the cost of hospital stays. So there's a hospitalization benefit. This is up to $200 a day for up to 30 days. Should they be in the hospital for a month? Again, so 200 times 30, this is another $6,000 value add to having this Options Plus benefit. There's also out of Canada medical coverage, and this one's more of like a reimbursement one, but if you want to still travel with your child, or you want to go out of the country for certain treatments for that child, this is where it becomes there's up to 25% of the face amount. So this is where, kind of getting the maximum face amount available for this product would be important, because this is the one that is a percentage of that face amount. Where if you're traveling and or you want to travel for this specific illness, or you're out of country and something happens, that there is a reimbursement of out of Canada medical coverage for you. There is a full range of coverage for the active child. Now, this is where it starts to get exciting for me. Sometimes people don't want to talk about bad things happening to their child when it comes to critical illness or, God forbid, death. But kids hurt themselves. They just do. I'm a mom of 2 boys, and the things that you just kind of go, what were you even thinking? But anyway, this is an accident benefit. And so kids hurt themselves. And I say to people, it's not about your child getting a critical illness even. Do you have a trampoline? Do your kids play sports? Do they have a BMX bike? Like, the chances of them hurting themselves is high. And there was a time way back when where people were like at the schools selling accident policies. But a lot of times that just only covered when you were at the school. But this is that. It's a full accident coverage for your child. And suddenly this starts to become a very smart purchase. It's not about wishing ill on your child. It's about, wow, this probably is a good thing to have, because accidents happen. And this is just kind of a list. There's a very specific list of what they would pay out according to what. But if they break their pelvis or thigh bone or their skull, it's $1,000, or a rib. If they break any bone not included in the above list, it's $150. There's benefits paid for hospitalization resulting from an accident. So now you're getting $55 a day for an accident, and hospitalization from the 1st to the 365th day is $25 a day. So just the parking or the cost of being at the hospital. Total disability resulting from an accident, if they can't work, or for students, if they can't go to school, there's coverage for even them for 12 months of disability. It's just so comprehensive. And here it goes on, you guys. And now, so it's not only just an accident, it now becomes a accidental death and dismemberment policy too. We hate saying the AD&D, but it is true, right? So the thing is that if this is not even about your child getting critically sick, it's about if they lose eyesight in one eye, both eyes, if they lose their hearing, if they lose a limb. This is now really not a small amount that gets paid out should this happen to a child, because they understand that you losing your sight or your hearing or something, it's not just like a whoops one-time event. There's probably going to be an ongoing complete change in life. And so there's these lump sum benefits available. All of this is within that Options Plus. Like, the $10 includes the compassionate leave, the hospitalization, the out of Canada coverage, and this accident and AD&D. And so if they need to go to physiotherapist, if they have dental prosthetics, if they got a puck in the tooth, in a tooth, right? There's help there. There's medical and surgical hospital services. There's X-ray fees for only one X-ray. Prescribed drugs, things that might not be covered by Alberta Blue Cross. There's just a whole lot available. And there is now this return of premium. and just back to the Options Plus, you guys, if you're not selling the Options Plus on this, it really isn't a Children 360. It's more like a Children 3 or Children 180. And nobody wants to say that. Nobody wants holes in the boat of what's possible, what could possibly happen to your child. So once they say yes, it's kind of and your positioning on this, like you can say, hey, I would feel like we've only done this halfway if we don't even add this $10 for the Options Plus. So return of premium on this product is basically 15 years without claim, and you get a portion of your premiums back. And the good news is it doesn't stop the policy. So if you were just to look at this, the rider allows for 3 refund opportunities. There's 2 75% refunds of the premium, and then there's a 100% refund, at age 75. But jeepers, if a kid gets this at 3, 75 years might as well be an eternity away. It's a long time. However, you claiming on this at some point, given the comprehensive coverage of what this is probably likely. But should you wish to hedge your bets and get some money back. So for instance, if a child got this at 3 years old, in 15 years when they were 18, they could get the 75% of the premiums back and the policy stays in force. And again, 15 years later, when the child is now 31 and they probably own this policy personally at that point, they could still get another premium refund without claim. And those seem like pretty convenient times to get a chunk of money back at 18 if you're going to college or school, and 31 if you got a family, you want to buy a condo, something, and then a full refund at age 75. So this is the simplest product online to write. There's only 5 eligibility questions. So those questions are really the ones that are you eligible for this product. And then there's 10 insurability questions. It can that will help us gauge this as well for you guys to know whether or not they can get the product or which portion of it. But there's no thinking in this product either. It's not like there's zero underwriting. So if you answer a question it doesn't like, it'll either tell you you don't qualify for this product, or it says what it says, or the things that pop up, but there's no thinking. There's no, like I said, nowhere to kind of tell the story or not. It's just you either qualify for this product or not. This one does ask a body mass index question for the children. But like we said, these are the 5 eligibility questions. Are you the mother, father, or legal guardian? Does the child to be insured reside with you at least 4 days per month? Was the child born in Canada? If not, has the child been a permanent resident of Canada? Has the child had an application for life insurance or critical illness insured refused or deferred or subjected to extra premiums? Or was the child offered insurance with an exclusion? So these are just, and then there's a BMI chart for them to answer. And then there is a few health questions to go through. Again, this product really is meant for children that are like, they don't have any issues. Like they're healthy kids, or you want to insure them before they become unhealthy or something like that. But this is really simple pricing because it's a universal premium regardless of their age or their gender. So depending on the amount that you want on coverage, it's a set amount. It doesn't matter if the child is 15 days old or they're, a week before their 15th birthday, because this is a policy from 30 days old to 15 years old. It doesn't matter if it's a boy or a girl, whether he's 14 or whether he is 3 months old, the premium is the same for the amount of coverage that you're looking for. And then it just stacks, right? It's just kind of it's a stackable a la carte product where it starts with critical illness. And then if you want to add critical illness or life insurance, you'll see it goes up $1 for the 10,000. If you want the full amount available in this product, it's a $50,000 maximum, and it is $26. Again, regardless if they're 3 months or 14 years old, it's $26 a month for the critical illness. Should you want to get the $50,000 to be a life payout, should they pass away as well, it now goes up $7. It's $33 a month. And then, like I said, they can add the additional life insurance for a few more dollars, which again, if they get the critical illness and get a payout and then they also pass away, then you can get this. And it's, you guys, when you break this down per day, I mean, it's just quite literally pocket change to have the full gamut. And then the $10 is a flat $10 for all of those things I told you that Options Plus covers. And again, $10 per child divided by 30 days. We're talking like over a quarter, right? It's like 30 cents a day. to have the options plus. Like, it's just, I can't even leave my house with my children and feel like I don't spend $50. Like, it's just, so to know that you have done this for your child, to remember that preparation releases pressure, to have all of these things covered. I think it's the easiest sell in the world. And I actually think it's one of the most referable products that I've ever seen, because families with children know families with children, and they don't talk about their seg funds. They don't talk about their retirement savings. They don't talk about that stuff usually with each other, but they will talk about this, especially if you as advisors ask for the referral and have it be something in it for them. Hey, if we close business with anyone, did you find value in this? Do you know anyone else that could benefit from this? If they, or at least have the steward to have them know about it. And by the way, if I close business with any family, I'd love to provide you with a gift card to your favorite thing, or for your, make it fun. Give it a gift card to Toys R Us so the kids get it, right? Something, you guys can get creative, but I think it's a really referable product. So this is the actual platform. This is the page you see on children. This is where you go, guys, children360.ca. Children360.ca. You can get to all of our web-based platforms right through Humania.ca. However, each one of our platforms also have their own domain. And so Children360, this product where you get to play, is children360.ca. And when you go into kind of the quoting, you'll see you don't even need their name. You just need their age. But again, the age doesn't matter, but just so that it'll show you when they get the return of premium in those 15 years. That's really the only reason that the age matters, is that they know when the start button starts, right? So you'll go and get, so here it's showing $10,000 is $10 a month. And that's critical illness only. When you start clicking on the and light up all the green boxes, it starts stacking it for you. So here you'll see I wrote this one I did at the $50,000 max, and then when you click on critical illness, like I showed you, critical illness or life, it's $33. But when you start clicking on the additional life and then the options plus, they will all light up in green, and then the premium will reflect that. It will reflect what you're clicking on. And so now it's time for our Quebec PDU poll. Oh, I guess, do I stop? Wendy, is this like a reverent moment where we should stop and let them have some peace and quiet?
I know you don't have to stop. You can just move that out of the way, and they
okay, guys, it's 2 questions. This should probably be no problem for you, but there you go. You can just do your Quebec PDU poll. The first question should be an easy one for you. Okay, so I think you guys got this covered and you can handle it. I'm gonna minimize it on my screen and keep going. We're almost done here on this product anyway, before I get into the harder to insure cases. So we'll stop for kind of a Q&A, because I see some things in the chat, and Wendy, you can share that with me. But let's just finish this portion. So you'll see that without the return of premium is there on the bottom. So it's already highlighted to be without return of premium. I just want you guys to know that when you click return of premium, we'll go back there. When you click return of premium, it always doubles the premium. So if you're sitting at $26 a month and you click if you click with return of premium, if it was at 26, it's then going to be 52. Okay, so the return of premium option always doubles whatever the premium price is with everything you've chosen. So I'm just going to give you my 2 cents on this. If a family has 3 kids and they're on a specific kind of budget, this product is amazing on its own. What matters is that the child is covered. So you'd rather have 3 children get the coverage at the 26 or 33 or $52 a month, whatever it is, dollars a month, and get all the 3 children covered on this product with the full gamut, rather than add the return of premium and they think they can't afford it. Because the probability of someone claiming on this anyway, at some point, given what I showed you on accident and AD&D and dental prosthetics or whatever, it's high. that they would claim. So they want the coverage is what matters. However, if they know that they would love to save or have a reason to save some extra money, and they love to hedge their bets so that should they not claim, then the return of premium makes sense. But if budget is the issue for them, and you're trying to keep it within that range, just make sure all the children are covered. The return of premium is a bonus. It's a bonus. But just so you know, it will double the premium. So that is our time together on the Children 360. If for whatever reason, a child cannot get covered in one, like I told you, there's no underwriting. It just pops up saying, sorry, you don't qualify for this product. If they have some kind of, maybe they've got a really bad family history. The family history questions are basically if your mother or father have had some of these things before the age of like 30 or something, not like our typical. So maybe it's a reason they can't get it. For whatever the reason they can't get it, I'm going to give you a kind of plan B and some other options that Humania has for children. Again, so that you have these tools in your toolbox. But I want to first stop and answer any questions and have a bit of a discussion about this Children 360 product first. So Wendy, maybe you can facilitate that and tell me what you got.
Sure. Okay, so the first question being asked was, who is the underwriter?
Humania is the underwriter. Yep.
Okay.
Yeah.
Thank you. The next question is it limited pay or level pay till age 100?
It's level pay till age 75.
Okay.
Which is why you get the premium back at 75 should you not have had any claim, but it's level 75.
Okay, perfect. And I think you've answered this already, but let's just make sure. What is the age limit?
15.
Yes. And another one just came in. What happens to the policy when there is an approved claim? Does it continue? Does it cease to continue? I think that's kind of the question.
Yeah. So what it means about, great question, by the way. What it means when it says if there's a claim, what they're really talking about is the critical illness claim. Like if you claimed for the 50,000, okay? If you claimed for the 50,000 and you didn't click on additional life insurance, then the policy would end because you got the full claim. But if you clicked on the additional life insurance, then the policy would stay in force because of that additional life insurance. So should the child pass away, they would also get that additional 50,000, if that makes sense. But everything else would stop because the options plus, like the out of country medical expenses, the hospitalization, the compassionate leave, those are all associated with the critical illness happening to the child, which means those would all cease. Those would all be in force. Sorry, not cease. Those ones would continue because if the child is critically ill and they, like you said, they're out of the country and they're hospitalized for those 30 days or the 12 months that a parent is getting. But once those are up, like once the 12 months is up, once the 60 days hospitalization is up, and they've been paid out, then the policy stops in those things, but not on if they have additional life insurance. Make sense? Wendy, I guess I'm asking you. Does that make sense?
Well, it wasn't my question, but I guess so.
Validate me.
So can I clarify? So if a child, has one critical illness and then they get paid out for that, whatever that amount is. So there's not a second recurrence or an additional critical illness or anything like that.
No, there's not a second recurrence. There's no, it would just be all the options plus associated with that critical illness that they got paid out. And again, if they had additional life insurance, they would now have this standalone life insurance policy.
Okay. And the advisor said, yes, it makes sense.
Yay. Thank you.
Okay. His name's Mark. Okay. So the last question here that I have is with respect to the return of premium, is it full money back or just a percentage? And I think you did respond to that as well.
Yeah. Sorry. There's a great question because you probably didn't, it was before the graph. It is 75% return of premium. Mm-hmm. And it'll show you see right here, like I ran this, you can tell that I ran this page right here on a 3-year-old because you'll see it says with return of premium at 18 years old, they would get $8,900 back.
Yes.
Okay. And again, so depending on how old the child is when they start this, these ages will change, but it will always tell you exactly what to expect from the 75%. And then at 75 years old, what they would get out full. But yeah, it's 75%. A return of premium on 2 occasions, and then a full return of premium should there have been no claim and they lived a healthy life till they're 75, right? Which is the hope. The truth is people go, I don't, they talk about Murphy's Law. And I'm like, well, Murphy's Law is that you should get this product because it means your kid will never have an accident, never get critically sick. And who wouldn't pay? What wouldn't you pay to make that happen? Right. But it's really about preparing for the worst. And I kind of hope that there's never a claim. That's the whole point. But with, like I said, all the things it covers, it's very highly likely that they might. So.
Okay, that's great. Well, thanks, Ariana. That's all the questions for now.
Okay, well, let's party on. Like we said, you hope that most children are generally healthy, especially at the ages that you hope to get the children covered on this. This might be a great reason for you guys even to go to people's homes who have preteens. Like maybe they got kids who are 11, 12, 13, 14, like they're kind of on the threshold of not being able to even qualify for this product or get it. I mean, so get the product if they can get the product. At 15, it becomes kind of a big hole for us for 15 to 18-year-olds, because some of our other, or you guys even know, like a critical illness policy, a normal one, a lot of them don't start till 18. So there's a bit of a gap, but get some kids covered on this. So our hope is that children can or get this product. However, we know that things happen. And so what if you have harder cases, right? So we have solutions for that as well. And it is in our Pro Health platform. Humania's Pro Health platform is our living benefits platform. So it's everything that you guys might be familiar with our disability products, income insurance, payments insurance, our accident only. But Humania's version of a CI product is their cancer insurance. Now, their cancer insurance also comes with a complete critical illness option so that you can add 5 more critical illnesses. So it's a total of 6. But again, this is a non-medical instant issue product. That alone, you guys, is really appealing to not just a lot of people, but just to the sales process. As you guys probably know, when you're like waiting for APSs or waiting for whatever, right? Not only is that frustrating, oftentimes you kind of get some situations where clients, it's like rage quits. They're like, you know what, forget it, whatever. There's the world we live in. We have become very accustomed to instant issue, instant gratification. And so there is something about that. Now, especially when it comes to children, they don't want them poked or prodded or whatever. We just want to answer some questions and get them some coverage. So we have a cancer insurance product, again, that you can click on and get a complete critical illness option. But the cancer insurance starts off separate because just you guys might be familiar with some other providers that do this, but we've compartmentalized cancer on purpose because there are people, now this won't apply to children, but you guys will, but because a person can get this product at 15 days old or older, but you guys will know that there are people who are sickly in other areas and it's stopping them from being able to get a complete critical illness underwritten product, either a flat out refusal or definitely an exclusion on the thing. But there are people who still want cancer insurance because they might have had a heart attack, stroke, or whatever else, but they want to have cancer coverage because they know the stats on cancer. So they do that. But most people don't think of it when it comes to children because it just feels like a CI product on an adult platform. But most people don't know that this product is available for people 15 days old all the way up to age 80. Age 80. So again, for some of you who may not think that there's products available for people up to age 80, this product pays out till age 90, so they could still get a term 10 at age 80 for cancer insurance. But today we're talking about children. So again, there's cancer insurance or cancer insurance with complete critical illness option. And the main benefits, obviously, for this is that you can get anywhere from $5,000 up to $75,000 on cancer. If they have this product and they get a minor cancer, it pays out 15% of the face amount. So again, a reason to maybe want the larger sum, because if you have a $75,000 face amount, you could get up to $11,500, right? That 15% of 75 due to a non-life-threatening cancer. This is a non-taxable amount payable, and there is also a 15% death benefit. So 15% on diagnosis of early intervention cancer, as well as 15% on as a death benefit should they pass away. And the cost of coverage will not increase for 10 years, but it's based on a 10-year increase up to age 90. And there is the option available to cover 5 other critical illnesses. So you guys, those 5 other critical illnesses, even though people say, well, so it's only covering 6 things, I just want you to know that those 6 things in the world of statistic claims on CI are around 93%. Like 93% of the CI claims in the world lie within these 6. It's cancer, heart attack, stroke, coronary bypass, paralysis, and coma, all of which are listed right here. So the technical sheet on this product for cancer, it shows you the amounts, shows you what gets paid out, and then the complete critical illness options: stroke, coronary bypass, heart attack, paralysis, coma. So that child, it's not a Children 360 product. It's not accident. It's not AD&D. It's not all the things that I raved about, but it's something of a critical illness insurance product for children, should people want that. And here's what's interesting is that the children that will not qualify as healthy kids for that Children 360, most of them, because they're sickly with something, that is suddenly when parents are actually wanting to cover their child for something, because it's interesting how our alert goes up and the things we want are when something feels difficult to get. And so at least there is an option for them. If you guys have kids who've been declined for policies, or declined even for child riders on because some companies even ask questions on their child riders for anything for the parents, we have an option for that too. But just so you know, this is what's available for them. So we're running short on time because I want to leave some time here just at the end. Switching gears again. So we had Plan A is our Children 360. Plan B is our Pro Health platform, cancer insurance plus 5 other critical illnesses. That would be a CI policy only for children, but at least it's something if they're not able to get the Plan A, right? Plan B is a great plan when Plan A doesn't work. And this is what I would consider Plan C, or Plan B and C, because B is only a critical illness policy. But if you want to have your child have some sort of life policy, we have our life insurance platform is called Hugo. It's an online platform. It uses artificial intelligence questioning. It is designed to give a standard rating for people on the questions alone. Worst case scenario, somebody gets, a parent or somebody gets referred to underwriting. The platform itself cannot decline you. However, the reason we're talking about this today on children's insurance is because one of the really great features about Hugo is that it has a dependent child life insurance rider. But this is why it matters most, is there are no eligibility questions for the children. Now, this might seem like nothing, just like meh, if you've got children who are healthy. But for those people in the world, or people you come across who quite literally have uninsurable children, these are kids who are, cerebral palsy, CP, they're in wheelchairs. They'll never walk or talk or eat by themselves, or anything like that. They're uninsurable, yet there is an option here for them, because our dependent child rider has no eligibility questions. I can't stress this enough. I have 2 very good girlfriends who both have children who would be considered uninsurable. And this is a game changer for them, because it means that they at least have some coverage for the child. And if they're uninsurable, the likelihood of them passing away prematurely comparatively to healthy children is high. And so to even have that be a final expenses payout, to have therapy, grief retreat, whatever, it's something. And so the face amounts available on the dependent child rider is $15,000 or $25,000, and it is a set amount. I think it's $11. No matter what the premium is for what the parent's getting, it's $11 extra for the $25,000 option. But this doesn't matter if, just so you know, it doesn't matter whether this family has 0 children, or 1 child. Why would you get a child rider if you had 0 children? Maybe because you have hopes of having children. But so whether you have 1 child or a dozen kids, this $25,000 will cover every one of those children should they pass away. However, where it becomes most important and why it matters is for a child that can't get coverage. And so if family has an uninsurable child and is looking for that child to have some coverage, all that needs to happen is that a healthy parent, or just a parent, needs to apply for this Hugo life insurance. A parent needs to apply for a minimum of 100,000. So we all know that most people are uninsured, really. So even if you guys have a family who has insurance coverage somewhere else, 500,000 or whatever they have, I'm not asking you to even touch that. You don't even need to replace any insurance. Just get them an additional $100,000 term policy, and then they can add the child rider on that. For a lot of them, that's just worth it alone to have something for their child. This also will, once they are of age, they can convert this $25,000 up to 5 times, which is pretty typical with other carriers, 5 times the amount without proof of insurability. So at least as they're older, they could have possibility of having $125,000 personally owned at that point, or if that's the case. But again, what's most important is that we don't ask a single question about the child's health. There is, however, a 12-month pre-existing clause, so that if a child is dying of cancer and they die within 12 months of this, there will be a 12-month pre-existing clause. However, if they pass away anytime after 12 months of having this product or this in force, then there's no issue. So just a reminder, what we talked about today, Plan A was the Children 360. And this is if the child is healthy. Plan B is the child has some health issues, but has never been diagnosed with cancer, nor is waiting for tests or surgery for cancer. Then they could get a critical illness policy or cancer insurance with our Pro Health. And worst case scenario, the child is uninsurable or has major health issues and cannot get either the Children 360 or particularly Pro Health. But again, there is a possibility if your child can't get Children 360 that they could get the CI policy in Pro Health, as well as be added as a dependent child rider, so that they at least have some life coverage, and you can kind of pair those two together. So really, just don't be afraid, right? Don't be afraid. Your job is to start conversations that count. And I really assure you, there is a huge market waiting for you. And this really is a good news story, right? Talking about children's insurance is a good news story. Like this Children 360 policy. Now, this is just kind of gospel according to Ariana Kane that I wrote in here, but this is not just a Children 360 policy. It's a peace of mind policy. It's a parent of the year policy. You guys, parents want to feel like better parents. We do. Like, I put like protein powder in my kids' pancake mix just to make me feel better about myself. We want to feel like good parents, and we want to feel like we did right by this. And I tell you guys that even if you guys got the premiums for this taken out like on the 21st or 22nd of every month, almost all families are getting some sort of child tax benefit from the government. Get the government to pay for this policy, right? It makes us feel good to think like the best thing we could be doing with that child tax benefit is having them covered, so that we are not at an opportunity or like a cost and an opportunity lost and not having this policy. So anyway, it's a parent of the year policy. It's a preparation releases pressure policy. And of course, the biggest issue is that it's a protect your greatest asset policy. You know, after I saw this policy, I realized so much of my discussions being with Humania is disability insurance. We have amazing disability products. And part of my presentations have always been, hey, protect people's greatest asset, which is their ability to earn an income. Protect their greatest asset, which is their income. That is actually baloney compared to their children. Their greatest asset is their kids. Their greatest asset is their kids. They would do anything, spend any amount of money, sell anything to whatever they needed to for their children. So it's a protect your greatest asset policy. And so back to, there are really only 2 ways to grow in business: get more customers or get more from the customers you've got. I hope this instilled some ideas for you guys of people that you have that have children. And the conversation, if that's the case, goes something like this. Hey, I just went to a professional day. I wrote this for when I went to one live. For you guys, it's no different than today online. Hey, I just was on an online presentation. I learned about something that would so benefit your family and help protect your plan. I'd be letting you down if I don't share, and I'm excited to. When would be a good time to connect? So you guys can honestly reach out to people, go, hey, I just learned something new that I really believe would benefit your family. My job's just to share it with you. And I think it'll help protect your plan. This is for people that you might have that are already clients because you put money away, you've done some things, but these are really plans that protect the plan so that they don't have to pull out money from investments or their RSPs. But get excited about it, you guys. I mean, I probably don't have to tell you that. I don't think anyone that I've ever met in my entire life has not commented on my energy. I can't help it. I was born this way. But enthusiasm is contagious. And really, when it comes to you guys, your conviction is what convinces. Really, they need to believe it a bit, but they need to believe that you do. And that is sales is an energy. And so when you feel convicted about something, you can hear it in your voice and your presence. So the goal for you guys is really with this product, warm referrals, athletic associations, swim clubs, sports. You guys, there's a whole bunch of people out there that would love to gather. You do a presentation, bring in some muffins and snacks. You can have a sign-up sheet of when they can book half an hour slots with you right after you do a wicked presentation when emotion is high. Get them signed up, and these are online policies. And have a big contest. Have something that if any closed business, you're entered into a draw and you do these things. But people are yearning for education on this stuff. They want to feel like they're prepared. They want to, and more importantly, just they need to know. We don't know what we don't know. So just be in the business of letting it be known. That's literally what the word promote means, is let it be known. That's your job. There's lots of ways to do this. And the reason I put that at the bottom, like the $7 online offer, free book, or why, the reason I put that is because you guys, sometimes people think this is a small premium. Like, well, I'm too busy to go talk to families for $26 a month for a children's policy. That is the wrong thinking, because there's a reason that big wigs online, you guys know this. Someone will offer you a $7 course that's normally this, or they'll offer you a free book. You just pay the shipping. Why do they do this? They do this because they know that they need to add value first, and they also know the numbers. They know that if they send out this many free books based on the data, this is how many big ticket clients come in and buy their courses or whatever. Even if it's a small premium, but you're doing the right thing, don't underestimate the power of what conversations can be had by your willingness to start this one, is all that I would say to you. So this is our sales team. If you are in the British Columbia area, your person is Taylor Ruby. If you are in the Montreal area, it's Marie-Pierre. We're missing someone. Dang it, I should have added the new slide that I have on my other presentation with Simon. So Simon Iowa is our Ontario new rep. He's amazing. Isabel is in the Atlantic region, but she's basically the trainer for Humania. This girl's my Jedi master. Everything I know, I learned from her. But there's me, Ariana Kane. If you're in a region that is not being shown here right now, please send me an email at ariana.kane@humania.ca. And I will make sure that I get you in touch with the right person. Also, if any of you would like a copy of a PDF of this presentation, by all means, I'm happy to share that with you. So again, also just send me an email. And that's it. That's our team. And our job is literally to help you do yours. So don't be shy. Reach out. Ask questions, help me help you.
Awesome. There was another question, Ariana.
Okay, let's do it.
And I think you've answered it as well, but just want to be sure. What happens to premiums after year 10?
Oh, in the Pro Health, there'll be an increase. They'll get a renewal. They'll get a renewal letter. Like it's an automatic renewal, so there's nothing to be done. But they'll be known, and they don't guarantee those, you guys, because depending on claims experience, whatever, you know how it goes. But it's minimal. But it's reasonable. Like it's reasonable, but it's a term 10 basically. Mm-hmm. They'll get a renewal, but they don't have to do anything. It's obviously, like in most T10s, no underwriting, nothing, but they'll get notified of the premium increase.
Okay, thank you. I know you said that you could share the slides. So if you can send it to me, and I can actually post it on our IDC Win Big website. So that way the advisors can just go in there and get it.
That saves me a whole bunch of time too. So yes. Of course, I will do that.
Okay, perfect. And I think that's it. So anyway, I thank everyone so very much for their time. And again, to Ariana for your great presentation. And I hope you have a great rest of the day and week ahead.
Amazing. Thanks so much, Wendy.
Thank you. Bye, everyone.
Bye.